oh, AT&T is going to have to cut into this dividend here to pay for this acquisition because they're spending the rest of their money on paying off all their other outstanding debt. Cool company. Hey everybody, welcome to Walrus Street. Walrus here, bringing you your news and earnings for the week of May 24th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. This week was pretty mixed in the markets, with most of the major indices ending just above or just below where they started the week. We did have a lot of price action in the middle of the week to the negative and then a recovery towards the end of the week. But overall, it was just a big nothing burger. Your portfolios most likely finished up the week pretty close to where they started. Some industries were hit a little harder than others. Tech continued to sell off a bit this week, and consumer staples, industrials, the more steady sectors tended to hold up a little better this week. I got some interesting messages from you guys this week. I'm going to be talking about a few of them during the video today, but let's get started. The first news story. This one might not be the biggest news story of the week, but this is a huge one for me. Virgin Galactic rockets to the edge of space in first flight since 2019. This happened on Saturday. Reached an altitude of 55.45 miles above Earth's surface. The flight, crewed by 2 pilots, also carried science and research payloads for NASA after takeoff from Spaceport America in New Mexico. The flight went flawlessly, said the CEO, Michael Colglazer. Virgin Galactic has already taken deposits worth about $80 million from 600 prospective tourists that it will launch to the edge of space in its future commercial flights. To be clear, those commercial flights are still a ways off. We have to undergo a test flight with 4 astronauts. Richard Branson himself is going to be going up before the general public, so that's still a little ways off, but this was a great step. The ticket prices are still about $200,000 a seat, which is kind of silly, but hopefully that goes down in the future. Let me go ahead and play a little bit of this video while I'm talking here. Now, Virgin Galactic is one of the first companies that I covered in detail on my channel. Back in November, I invested into this company because of their planned December launch. My investment is actually one of my heaviest bags in my portfolio. The stock price has plummeted since I invested in it by about 50%, which is unfortunate to say the least. We've had delay after delay on these test flights, so this finally getting into suborbit is just a huge relief from my perspective as an investor. Honestly, at this point, I just want to unload my position once I hit break even and pivot that money elsewhere. Virgin Galactic is a perfect example of why an investor needs to make a thesis and stick to the thesis. With Virgin Galactic, my original thesis was that I was going to sell after the test flight on the pop. If the test flight failed, then I was going to keep the shares until the test flight was rescheduled. Well, the test flight didn't happen. There was no pop. The share price took a hit. I kept the shares anyway because I was too stubborn to sell at a minor loss. Fast forward, another test flight, another delay, bigger loss, insider selling, just a whole bunch of bad things happened. And now, because I was undisciplined in my investment, I'm sitting at like a 50% loss on my position. And this is really just a great healthy reminder to me on why I'm supposed to stick through with a thesis. Also, if you guys want to laugh, go ahead and check out the Yahoo Finance page for Virgin Galactic. Go to the conversation section and look at some of the price targets. Absolutely hilarious. The price targets for Monday that people are putting out. I mean, there's people saying like not just $50, $51, and that's like one of the most highly liked comments on the page right now. It's just absolutely hilarious, and it makes you wonder, like, how are they getting these valuations? I feel like they're just throwing darts at a board, and whatever number it lands on, that's what I think this company is going to be worth. A $51 price target for Monday would be like a 150% increase in the market cap of the company in a single day. If that happens, I don't know what I'll do. You know what? If that happens, I'm going to buy more calls on Shift and Cliff. That's not actually a punishment. I'll do that anyway, but I just want another incentive for it. So just ridiculous prognostication from armchair investors. If you're curious about how high 55 miles is, low Earth orbit here is between 100 and 1,240 miles. We're about halfway, a little over halfway up to low Earth orbit. Getting up to suborbit is really impressive, especially for a commercial craft. Even though it seems like it's really low, you know, we're not at like geostationary orbit or like ISS level, it's still impressive. Next story, Michael Burry of The Big Short reveals a $530 million bet against Tesla. He has long puts against 800,000 shares of Tesla, or $535 $124 million by the end of the first quarter. Burry was one of the first investors to call and profit from the subprime mortgage crisis back leading into the great financial crisis. Burry previously mentioned in a tweet that Tesla's reliance on regulatory credits to generate profits is also an impediment to the company's long-term prospects. Burry has since deleted that tweet, but that is a really interesting point. A lot of people that were buying EVs, buying Teslas, were only doing so because of the credits they were getting, kind of the rebate vouchers from the state governments that were honoring that. I know California had a program like that where people would actually get a substantial amount of money back if they purchased a Tesla, if they purchased an EV. So people were doing it to get that cash back. So it was kind of almost artificially driving the Tesla sales in the early days. And that was a really, really interesting point by Dr. Burry, because if that rebate, if that cash back, if that incentive, if that voucher was not there, how many people would actually be buying Teslas at these prices? We can't really know. Burry also recently was long on GameStop. I'm pretty sure he closed out of his position, but he made a killing on it. His group Scion Capital, if you want to look up their documentations, their filings, they're doing really well between the GameStop and these Tesla puts. I'm sure if he bought them by the end of quarter one, he's up substantially on his position because Tesla has dropped a lot since quarter one. That being said, I don't want to buy puts on Tesla for a couple reasons. One, the volatility is so high, the puts are very, very expensive. Two, betting against Tesla is, in my mind, not a safe thing to do. Even though I think undoubtedly the company's insanely overvalued, betting against Tesla is like betting against the mouse. You don't bet against Disney, and in my mind, you don't bet against Tesla either. I applaud his decision. I applaud the size of his cojones, but I'm not going to be joining in on this one. Next up, we got a couple of semiconductor stories in a row. The first one, perhaps I'm a little biased because I live here, but Korea invests more than $450 billion to realize the ambition to dominate the semiconductor industry. The Korean government said it'll support major Korean companies such as Samsung to establish the world's largest semiconductor supply chain in Korea. Now, if you remember, we talked about Intel a couple weeks ago investing $20 billion into a foundry, a new chip foundry. Last week, I believe, we talked about the US government putting in a bill for another I forget the amount, but like $55 billion in semiconductor funding. Here we have Korea outdoing everything there and saying, hey, by 2030, we're going to invest $450 billion into this industry. Some 153 chip companies, including the world's top two memory chip makers, Samsung and SK Hynix, plan to invest a total of $449 billion in R&D between this year and 2030. Now, that's a little less sensational than the title here, but we have about $450 billion coming from private enterprises and the government. It's not just the government itself. And this is going to be a lot of R&D as well as new facilities. Samsung said it'll spend an additional $33.6 billion to become a leader in both memory systems, bringing its total long-term investment to $151.4 billion. This is obviously really, really big. Korea knows that people don't really want to be buying Chinese semiconductors, and US production capacity is not high yet. So Korea has a very unique opportunity to increase its output, increase its technology, and actually compete with TSMC to become the leading semiconductor market in the world. Korea also has a really unique situation with a highly educated and specialized workforce that makes this perhaps more possible than in other countries. You can simply get more qualified engineers in Korea in this field to do this R&D, to carry out this manufacturing. I think Korea actually has an advantage both in finances with this massive commitment and in manpower. So maybe by 2030, we actually will be seeing Korea as the leading semiconductor manufacturer in the world. Nvidia announced a 4-for-1 stock split, pending stockholder approval at the annual meeting set for June 3rd. This was announced on May 21st. The 4-for-1 stock split is not official yet. It is going to be going for a vote. The purpose of the 4-for-1 split is to make the stock more accessible to investors and employees alike. Now, with the stock split, you have simply the number of stocks going up, where one share becomes 4, and people are going to basically be getting an additional 3 shares for every 1 share they own. Materially, the prices are the same, and this doesn't affect the market cap, so you would not expect the price per share to increase off this news, but the stock market just went ahead and did stock market things. If you take a look at Nvidia's price per share when this news came out on the 21st, we actually gapped up. The day before, we closed at $584. The next day, we opened at $606. So there was a $20+ gain, and we ended up running up to a high of $608.88 before settling back down. So this actually had a significant noticeable impact impact on the share price, even though a stock split, it doesn't materially change the company at all. So this was odd and kind of confusing. Right now, Nvidia has 622 million shares outstanding. A 1-for-4 stock split is going to go ahead and multiply this out by 4. So suddenly this company is going to be sitting on 2.4 billion shares. That's a lot of shares. AMD announces a $4 billion share repurchase program. One of my followers ended up sending me this news story this week asking me to cover it. Honestly, even if he didn't send me this, I would have covered it anyway because I was doing the semiconductor section. But under this program, the company intends to repurchase up to $4 billion of outstanding stock. And it's going to fund this repurchase through cash generated from operations, which have been strengthened by the company's strong operational results. We've seen this on their last couple earnings reports. AMD's just killing it. A share repurchase program does a couple of things to the stock. First one, it decreases the number of publicly available shares because the company's literally buying them back to take them off the market, out of circulation. This in turn increases the ownership stake of shareholders. Because there's fewer shares out available, each shareholder owns technically a higher percentage of the company. And in the short term, this is going to kind of artificially boost EPS. So what we're going to see with AMD, depending on how many of these shares they buy back before the next earnings report, we might see just a blowout earnings report on AMD next time in terms of EPS specifically, because the EPS is going to be artificially increased. The thing I find most interesting about this is typically a company initiates a stock buyback program when it feels that its share price is undervalued. A company knows its own financial situation better than anybody else, even the analysts covering it. So this is actually a big vote of confidence for AMD. The fact that they're initiating the buyback right now at the current share price, they feel as though their company is undervalued. So this is by far a more bullish signal than like Nvidia's 1-for-4 split. But if we take a look at the chart on Thursday when this was announced, we actually didn't have a very significant rise. We're actually down from Thursday right now. Like there was a little bit of a blip upward and now we're back down. And this is kind of a significant buyback. If we break out our handy dandy calculator here, we've got a 4 billion, more zeros, share buyback program. Current price per share, $77. That means they're going to be buying back about 52 million shares. We see AMD has 1.22 billion shares outstanding. So if we take our 52 million shares and we go ahead and divide that into the 1.22 billion, we see that they're actually buying back about 4% of the shares outstanding. This is not an insignificant number. A company buying back 4% of its shares outstanding should translate to a significant increase in the price per share. Now, the issue here is that AMD is trading at a PE that's absurd. I believe their PE is somewhere around 240. Forward PE is around 35. So is this 4% share buyback going to translate to a higher price per share, or is it already kind of factored in with the high PE? It's really hard to say how this is going to impact the price, but this is a bold move by the company. Next up, AT&T is in talks to combine media assets, including CNN, with Discovery. Discovery was in the news earlier this year with the Archegos Capital situation. I don't actually care about AT&T, but this is something that has always been in the back of my mind. When people buy AT&T, they're buying it for the dividend. AT&T's dividend was somewhere around 7%, which is absurd. Nobody buys AT&T because it's a growth stock. If they say they're buying it because it's a growth stock, they're lying. Ask them to stop. Last year, AT&T took a hit because they froze their dividend at the start of COVID, and they made things even worse when they said they're going to use the funds from cutting their dividend to pay for the acquisition of Discovery. Ouch. The talks, which likely value the AT&T business at well over $50 billion with debt, could lead to an agreement by Monday. The potential tie-up would be a surprising U-turn by AT&T, which placed a massive bet on media with its 2018 acquisition of Time Warner for around $81 billion. That deal made it the world's most indebted non-financial company. AT&T's debt burden is obscene. That's one of the reasons that not many people want to invest into the company, and really their only responsibility is to maintain the ability to pay out their dividend. As soon as they announced this acquisition with Discovery, their share price just took a hit after it was revealed that the dividend was what was going to be used to pay for this acquisition. Now, on the chart here, you could see the day it was announced, AT&T just shot up here, up to like $34. Oh, we're going to be getting Discovery? Great. But then as details emerged, the dividend was going to be used to pay for the acquisition. The share price ended up tanking all the way down down to $28.67, and currently we're sitting at about $30, almost $34, down to $28.67, just as soon as people understood the dividend was going to be cut to pay for this. Not a good move on their part. Some more details from Bloomberg. While AT&T hasn't officially cut its dividend, the company said its payout would be 40 to 43% of its free cash flow, which is projected to be around $20 billion in 2022 when the deal is expected to close. Now, this would be about $8.3 billion at the midpoint compared with the $15 billion paid out to shareholders in 2020. So even though it's not official, everybody's kind of looking at their books and realizing, oh, AT&T's going to have to cut into this dividend here to pay for this acquisition because they're spending the rest of their money on paying off all their other outstanding debt. Cool company. We had a big IPO this week. Oatly rises 18% in debut after raising $1.4 billion in IPO. That's right, $1.4 billion for a company that makes oat milk, just oat milk, nothing else, oat milk. Oatly Group, the vegan food and drink maker, climbed 18% in its debut after pricing its IPO on the high end to raise more than $1.4 billion. The IPO underscores plant-based products jump into the mainstream as environmental and health concerns spur consumers to seek alternatives to traditional meat and dairy products. Investors have been looking for ways to replicate the public market success of Beyond Meat, whose shares have surged more than 300% since they went public in May 2019. Now, Oatly might actually become a victim of its own success here, as their production right now is not capable of meeting up with their demand. They have a partnership with Starbucks, so they have to supply their oat milk with Starbucks all around the world, and grocery stores are having a hard time keeping their product on the shelves. So if the company doesn't address their manufacturing bottleneck soon, hopefully with this money they raised on IPO, they might actually lose the opportunity to build on their own momentum. We opened on the 20th around $22, and right now we're sitting at $22.46. We dipped as low as $20. So this hasn't actually been like a huge mover, and the volume kind of dipped off on the last day as it was at its highest. So you can almost feel like this is going to be the peak value for Oatly for right now. Typically when the volume goes this low, that means there's not really any more buyers in the market. So the sellers are going to have to lower their price a little bit to attract more buyers. So I'm actually expecting this to drop a bit next week. A couple of quick cryptocurrency related stories. The US Treasury seeks reporting of cryptocurrency transfers, doubling of IRS workforce. You can't escape the IRS. They're coming for your crypto. The Biden administration's tax enforcement proposal would require that cryptocurrency transfers over $10,000 be reported to the IRS and would more than double the IRS workforce over a decade, the US Treasury said on Thursday. The plans were part of the Treasury report detailing the Biden administration's proposal to invest some $80 billion into the US tax agency through 2031 to improve compliance on revenue collections. As with cash transactions, businesses that receive crypto assets with a fair market value greater than $10,000 would also be reported. Obviously, this is just the IRS trying to make sure the US gets its cut of everything, but this also kind of gives you the idea that businesses perhaps have been using cryptocurrency more than has been realized over the last couple years to spurn the IRS into doing this, which, as somebody who's bullish on cryptocurrency in general, for me, this is kind of a roundabout way of saying cryptocurrency adoption is higher than most people realize, especially if the US is making this move to ensure that the IRS gets its cut. They wouldn't be paying to double their workforce to deal with this issue if this wasn't a huge issue. Follow the money. Now, oh my gosh, this is funny. Coinbase announces proposed private offering of $1.25 billion of convertible senior notes due in 2026. Coinbase is just a mess. I remember when they IPO'd, I was really excited and I put in my order for a purchase at $250 a share. And I didn't get a fill, obviously. We ran up above $400 within 2 days of the IPO. But since then, we've actually dropped as low as like 208. I'm glad that I didn't keep my order open because I would have even been down at my $250 position. I cannot imagine investing in Coinbase at $429 and being down 50% on your position in like less than a month. That has to be one of the most heartbreaking things. The Coinbase share price is far too correlated with Bitcoin for my liking. And this news indicates a bit of a dilution so they can raise money. Things just get worse for Coinbase investors. You could see throughout the week, this news was released on the 17th. It didn't have much of a direct impact on the price, but as people processed it throughout the week and as Bitcoin lost a bit of value, we ended up moving from an open of 250 down to a close of 224 with a low of 208. So we actually lost about $26 in price per share value this week on Coinbase. I'm still interested in the company. They make a ton of money, but nothing on this indicates that the trend is going to reverse. I think the RSI right now is oversold, but we've been oversold basically since 2 weeks after IPO. This is a tough time for Coinbase. Zim reports their financial results for the first quarter of 2021. If you remember last week, I talked about an options play in Zim to take advantage of the spot shipping rates. I was not just a little right, I was incredibly right. I went in on that option on Monday morning. I think the price per share was around $38 at the time. We rose as high as 47 this week. Just for when I purchased my option to the high point of the week, the share price ended up gaining about $9, which is obscene. The company generated a record quarterly net income of $590 million and an adjusted EBITDA of $821 million. They announced a special dividend of approximately $238 million or $2 per share on top of their 2021 annual dividend. Here's an indication of just how silly this ER was. Their net income for the first quarter was $589.6 million compared to a loss of $11.9 million in the first quarter of 2020. That is a difference of $600 million. And it worked out to an EPS of about $5.35. Incredible earnings report. I closed out my option at 62%, and I posted about this on Twitter, letting you guys know that I closed. By the way, if you're not following me on Twitter, please do so. The link is below the video. And I had somebody at me and say a couple days later, oh, if you would have held, you could have gotten like 140% returns. You would have waited until 47 because I sold when it was like 43.50 or 44, I forget. I didn't reply to this, but I kind of wanted to address this in my video. My plan was to hold this for a 30% gain. I held it past that just because I was asleep at night. The next day I closed it out at that gain, but I don't look back at something like that and think woulda, coulda, shoulda. I talked about this last week or the week before where that's kind of a toxic mindset. You don't want to consider what would have happened, what could have happened, because if you kind of let that fester and infect your mentality, then you're more likely to make a bad decision in the future trying to time the top. You'll put yourself into a position where you miss it and you end up losing. I would rather walk away with a definite 62% gains on a week than try to time the top. When I closed out that position, it was actually only 3 or 4 days after I opened it. Returns of 62% in 3 or 4 days, that is unheard of in the stock market. I am quite content with that gain and not timing the top. Let's take a look at the upcoming earnings for this week. Lordstown Motors, after close on Monday, theirs got pushed off. A couple of auto stocks, AutoZone and CarMart, some dollar stores on Thursday, Dollar General and Dollar Tree. We've got Dick's Sporting Goods. Again, I just wanted to say the name. I don't have anything to say. I want to take a closer look at Toll Brothers. We have some clothing retailers this week: Urban Outfitters, Nordstrom, Capri, American Eagle, Gap. So a lot of different like kind of groups of retail. And I'm also kind of interested in looking at Sanderson Farms. By the way, if you're following Intuit, this is not the earnings report that you want to kind of make a bet on Intuit. It's next one after tax season ends, because Intuit runs TurboTax, which is the largest like self-filing tax software in America. So if you want to do anything with Intuit, next quarter. Really quickly though, about CAPRI. I didn't know what CAPRI Holdings was, so this is kind of just a little bit of education for myself. I went to their website. This is actually the company that owns Versace, Jimmy Choo, and Michael Kors. I don't know really anything about designer fashion, but I do know that these are 3 really huge brands. If you're ever looking at CAPRI, at least now you know what they sell, because I didn't know personally. First up, I want to talk about Sanderson Farms, which is a poultry producer. I'm not actually going to open an option on Sanderson Farms, but it is going to be something that I'm looking at opening an option for in the future, and I'm going to explain why as we go through this. Just like with every other commodity, there's a chicken shortage, and it all stems back to supply chains being interrupted for COVID. Chicken shortages have sent the prices soaring for chicken. Chicken prices historically have been roughly about $1.30 a pound, and they've increased to $2.20 per pound. If we go to the poultry futures, you can almost trade anything in the future, it seems. Chicken futures right now are pretty high, but they're not as high as they were historically. Just back in 2018, we were around $269. While this price is high, this isn't like steel and lumber where we're looking at an all-time high, where companies are going to be reporting just record-breaking earnings. Chicken prices are high, but there's also a couple other things worth considering. What do chickens eat? Chicken feed. What is the primary ingredient in chicken feed? Cereal grain. What's the primary ingredient of cereal grain? Typically corn. And corn prices are also close to all-time highs. So even though chicken is going to be selling for a higher price, the margin isn't there because these farmers are paying higher prices for the feed for the chickens. I don't know how much it's actually going to offset the higher chicken prices, but I can't imagine this is going to be blowout earnings to the top side. Also, here's another consideration. Soaring raw material costs may delay a new US chicken plant. Sanderson Farms needs to create a new plant to keep up with demand. Their CEO says, I need a new plant to open up next week. Obviously, he's speaking metaphorically, but he's saying if they could open the plant next week, then there's already demand for those chickens. So this is actually a very bullish statement. The CEO went on to say it's more lumber than it's steel and concrete. Steel and concrete go up all the time. Every complex costs more than the last one, but it's lumber right now that's giving the company pause. Sanderson can't take on any more orders without expanding. We're totally sold out, and we've had people call us to service them, and we cannot take any more business on, and that's not a good place. He understands the urgency here, but materials costs are so prohibitive that he can't open the new plant. Tyson, their earnings beat their expectations, but the CEO warned of mounting margin pressure. Now, this is the Tyson CEO. We're seeing substantial inflation across our supply chain, which will likely create margin pressure during the back half of the year. And here's the rub with Sanderson Farms, and this is what makes this a difficult play. I think their earnings are going to be a beat this week. So in the short term, it could be worthwhile to play a call option on them. But like I was saying, with the chicken feed, and because of all other inflation along their entire supply chain, as reported by the Tyson CEO, I think it might be worthwhile to buy puts on Sanderson Farm towards the end of the year. But the thing is, I don't know what price to buy them at. And also, the calls and the puts on this company are very expensive. Not objectively, but personally for me. My risk tolerance dictates that I don't spend more than 2.5% of my trading portfolio per trade. So if I make a horrible call, a horrible mistake, I'm not going to lose more than 2.5% of my trading portfolio. The calls on Sanderson Farms and the puts on Sanderson Farms, where I would be looking at buying them, they're about 3% of my trading portfolio. I'm not really comfortable buying them, even though my gut says Sanderson Farms is going to go up in the short term, maybe through July or August, but then go down towards the end of the year. You know, you don't have to invest in something every time to learn from it and to use it as a learning opportunity. For my options play of the week, I want to actually go back to housing again. You know, we talked about Lennar on the channel. We talked about KB Home. We've been talking about lumber prices. We've been talking about how housing is just blowing up in the American Southeast and Southern Central areas, especially with the mortgage rates as low as they are. People are just buying new homes. This week, Toll Brothers is reporting their earnings. They're the 5th largest housing manufacturer in America, and they specifically focus on the luxury housing market. Typically, luxury housing is going to be less affected by smaller market fluctuations because the clientele just want their house and they're not really concerned about an additional $20,000, $30,000, $40,000, $50,000 like your standard home buyer would be. I feel as though the Toll Brother earnings are going to be absolutely incredible, and just like KB, just like Lennar, they're going to be reporting a backlog on orders. This is their website, Toll Brothers Advantage. They talk about prestigious locations, distinctive architecture, unrivaled choice, extraordinary customer experience. Just look at the home, look at the way their website is set up. These are obviously homes that are catered towards wealthy people. These are luxury homes. They're pretty well off their high of $68.88. They're down here $60 aftermarket. The RSI is really low right now, indicating a little bit of oversold, and this is one of the reasons why I am very interested in this investment. I think the earnings are going to be killer. We have the MACD trending upward. The 12 is flattening, the 9 is rising, and you can see the slope flattening of the 26. These two things together to me are indicating a trend reversal. Plus, we had some pretty high volume candles towards the end of the week last week. The stock price is kind of respecting the 100-day moving average as a little bit of a line of support. All in all, the technicals make me think this is going to be a very good buying opportunity. For the options on Toll Brothers, I'm actually going to go out about a month to June 25th. Currently, the share price is about $60. I'm going to be buying these $60 calls. Right now, they're $3.30, so $330 per contract. And I'm probably going to buy a couple of contracts of this. Now, I'm playing this one conservatively. The technicals are indicating that this this is going to be bouncing to the higher side, so I probably could be playing this a little bit out of the money. But also, I think that the earnings, there's a chance that they could be baked into the price because we've already seen good earnings from Lennar, good earnings from KB Home, good earnings from the other home builders. Toll Brothers is kind of like one of the last ones reporting. So it's possible that the earnings are already baked in, which is why I want to play this at the money and be a little conservative with it. All right, everybody, that's it for me today. I hope you enjoyed the video. As always, if you're new to investing and you want to support the channel, please check out my Webull referral link below the video. If you sign up for an account, deposit $100, you get a free stock, I get a free stock, everybody wins. Because I'm partnered with Webull, the free stock I'm going to be getting is worth $30 or higher. Also, if you enjoyed the video today, please like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, have a good week. Happy investing. Good luck. Stay safe. See you next time.